Hey, it's Grim here, and we're going to cover two stocks that look like they're going to be amazing beneficiaries of artificial intelligence. We've already covered NVIDIA, and we saw the amazing potential there. Let's see if there are other opportunities in this sector. I manage over 7 figures of capital, and I'm here to share some of my insights with you. Both of these stocks are down a lot, but let's see if we can catch the bounce. Stocks that drastically drop are normally overreactions. We can see this with Facebook, NVIDIA, and Tesla. These can be insane buying opportunities. Applied Materials provides the equipment for many of the steps in the chip making process. Supermicro, they assemble the actual server that's used in the data center. Both of these companies are trading at low PEs. Let's dive deeper. Applied Materials. One of the first things you want to do when you research a company is go to their investor relations page. This is going to contain a ton of information about the company. Today, we're going to look at their investor report that was included in their Q3 earnings report. I've analyzed this report already, and so I'm going to point out the most important slides. These two slides here, Applied Materials explains the opportunity in their business moving forward. All of this is complex, and I don't expect you to understand what's on screen. As you learn more and more about the business and follow it, you're going to be able to build knowledge on this, and you're going to be able to build an edge. There are YouTube channels that cover tons of information about this that the average investor doesn't know. Even investors that are dedicated to following this industry don't actually dig into this stuff. They have families and lives, and they normally cover 20 to 30 stocks. They don't have the time to actually dig into a company in detail. If you dig into the detail of a company, you're going to know when it's an opportunity to buy or sell. These are the three major business segments that Applied Materials are in: semiconductor systems, their software business, and then display. Display is for the manufacturing of something called OLED displays. OLED displays are what you find in your phone, tablet, and high-end televisions. This doesn't make up much of their revenue, as it's only $200 million. One thing to note is you have to pay attention to the graphs provided on here. Semiconductor systems is the majority of their business, but if you only looked at the bar charts, it seems like it's on par with the software business. Another slide to look at here is the glossary. This is what's going to help you understand all of the jargon that you see while looking through an investor presentation. Then you're going to want to watch a channel like Asianometry to learn deeper about this process of manufacturing. Now let's look at the financials for Applied Materials. First off, we're looking at the revenues, and we can see that revenues have grown over the last 10 years from $9.7 billion all the way up to $28 billion. Again, be careful with the graphs and the scale. This graph is logarithmically scaled. Now we look at revenue growth. I use a 5-year annualized growth rate to smooth out the growth. This gives you an understanding of the long-term growth at any point. It seems on average that Applied Materials has a 10 to 11% annualized growth rate of revenue. Now, let's look at the net income. They have grown net income from $1 billion all the way up to $5.54 billion. Their net income growth is even more impressive. Look at this. The median for their net income growth is 19%. I think that given that we're in an artificial intelligence boom, I doubt we're going to see their growth rate for net income dip below 15% for long-term growth. Now let's look at the gross profit margin. Gross profit margin is doing very well too. We're going from a 41% here all the way to 49%. Finally, let's look at the price to earnings multiple. The price to earnings multiple is above the mean and median. However, the mean and median for this company is 15.8. That's weird. For a company that's growing their net income this fast, why is the PE so cheap? With such a cheap PE and high growth, I decided to check the shares outstanding, and it seems like Applied Materials buys back a ton of their shares. They've reduced their share count by 33%. That's huge. Look at the total return for Applied Materials over the last 10 years compared to the S&P. It's a cheap stock with high net income growth. What isn't there to love? This is actually kind of wild, and we are definitely going to be revisiting this and doing a more in-depth dive of this stock. Risks and concerns. Semiconductor manufacturing is a very complex business. It is something so complex that we as investors won't be able to notice if something is going wrong with the business. However, these companies are basically vertically integrated now. They've all been working together for so long. If there was an issue, the whole manufacturing chain would fall apart and we wouldn't get new phones, tablets, or computers. Considering that we've gotten these products for the last 10 years, I think it's relatively safe to assume the nerds got this figured out. Either way, we're going to try and look into the business as much as possible and see if we can learn more on a deeper dive. Competitors. Applied Materials has competitors, however, I don't think these guys should be considered as direct competitors. A lot of this is vertically integrated, and I don't think that you can easily substitute these technologies. Lam Research, Tokyo Electron, and KLA Corporation are some of the competitors of Applied Materials. There are a lot of steps to chip making, and Applied Materials is involved in all of them. Their competitors are also involved in many of the stages as well. You're going to need to research and learn about each of these stages if you want to have a competitive edge in this business. I have been watching Asianometry for a long time now, and so I'm quite familiar with each of the steps. But even still, I'm going to go back now and rewatch all the videos to learn more. Let's do a financial forecast now. Financial forecast. For my financial forecast, I was initially going to use about 15% EPS growth. However, they not only have way more than 15% net income growth on average, they buy back a ton of shares. I actually think that over a 5-year period, they'll probably be able to achieve an 18% EPS growth. This is the bare minimum I think that they are going to do. That's already quite a big upside compared to the S&P's 76% return on average over 5 years. I think they can even do better than 18%. I think they actually can do 21%. That would give us a 150% return compared to the 76% return of the S&P. But if for some reason their forward PE was to actually respect the growth of this company and was to re-rate to something like 24, we could get a huge upside for this company. There's no reason why this company should be trading at such a cheap multiple. I still think that we could get close to a 250% return just from the fact that they do so many buybacks and the stock is so cheap. Now, let's look at Supermicro. So I've already read through this here, and here's a few key points for you to look at. The first one is that they are the first to ship NVIDIA's latest chip, GB300. Now, to give some context to this, NVIDIA is very picky about the people that they work with. Supermicro was one of the first server distributors that NVIDIA did work with. Correct me if I'm wrong in the comments here. Because of this gives Supermicro a unique advantage of having their products already ready to go. And NVIDIA usually favors certain partners. The next thing to look at here is the liquid cooling. One of the reasons why I wasn't that interested in Supermicro was the company was very small, an under $1 billion market cap company. Building servers isn't some complex thing, so you're not going to get a ton of revenue out of it. However, building liquid-cooled servers, that's a lot more complex of a thing. This slide here exemplifies this. Liquid cooling was a very small part of their business, but now it's growing rapidly. This is because NVIDIA chips use a ton of power. Here's a video on YouTube of what the insides of a Supermicro server look like. This YouTube channel, Craft Computing, was invited to this conference to look at Supermicro's latest server offerings. One thing he showed off was this liquid-cooled server. Normally with servers, you can manually upgrade them, And so part of my issue with investing in a company like Supermicro is that some of the parts are upgradable. This means that you don't have to replace the server as often. Now that they're liquid cooled custom solutions, it's much harder to take out one chip and put in another. Chips are different sizes, and water cooling solutions are specifically made for that specific chip. These are the types of things that you're going to learn more and more about as you follow an industry and really focus in on it. As you learn more and more, you're going to hear things in the news and you're going to see investors sell at times when you know that the narrative in the media is wrong. This slide just shows the massive growth of Supermicro's business. Part of this is that Supermicro is not just selling servers anymore like they used to. They have updated their system from just the components all the way to complete total solutions. A rack is like this. So rather than selling the individual parts that would go into the rack, they sell you the complete rack completely already built for you. There really isn't that much detail in their presentation. If you want to learn more about Supermicro, you're best off going to YouTube. Lots of YouTubers get invited to Supermicro events, and Supermicro is quite an accessible company. Lots of YouTubers follow their products, and so you can learn quite a bit about servers that way. Now, let's dig into the financials. Starting with revenue, Supermicro has grown from a tiny $2 billion business all the way to a $22 billion business. While I didn't think that this company was growing revenues, it seems that they always actually were growing revenues. Even 10 years ago, they still were averaging a 20% revenue growth rate. However, the revenues were just so small that it wasn't that impressive. Here's Supermicro's net income. Supermicro didn't really start growing until the artificial intelligence revolution. They were also boosted by offering complete solutions and the rack plug-and-plays. Here we can see their net income growth. Their long-term net income growth has been pretty good over the last 10 years. It has skyrocketed now. I think this is one worrying aspect of the business. The gross profit margins aren't that large and they don't seem to be that stable either. Looking at the forward PE of the company normally traded at a very low PE of 12 to 13. Now it trades at a 15.9. Previously, it was trading all the way up at a 30 forward PE. However, there was an accounting scandal and that drove investors out of the stock. Now we're sitting at about a 16 forward PE, but the company still has a lot of growth ahead of it. It looks interesting, but I'm still worried about how much margin they can actually squeeze out of such a business. Risks and concerns. One of the reasons I was originally worried about Supermicro is there was no actual good reason to upgrade your server regularly. This is because computing performance didn't upgrade that fast year over year. Now though, with NVIDIA being the primary driver of servers do upgrade year over year. And so that mitigates one of my major worries. That being said though, this type of business isn't rocket science. It doesn't take that much capital to get into either. Another upstart that is very good with computers could get into such a business and be able to compete with Supermicro. Most of the server players only have about 8% market share tops. The server industry is quite a fractured business. Supermicro has lots of competitors like Dell, HP, Lenovo, and more. As NVIDIA works with their other competitors, and maybe even upstarts, they could drive down all of the margin out of this business. NVIDIA isn't a stranger to squeezing its partners out of margin. A recently deceased partner of NVIDIA, EVGA, had their margin squeezed away so hard that they had to shut shop. This is the type of thing that worries me about Supermicro. Financial forecast. Even though Supermicro has great growth, one thing you should consider are the shares outstanding. You're buying shares in a company, and so if they issue more shares, then it dilutes your ownership. Because Supermicro is issuing more shares, it's going to curb its growth. Although the company has had a median net income growth of 16.7% and an average net income growth of 29%, I'm going to use a 14% EPS growth going forward. The current forward PE is 15.9. Given the low historical PE and my uncertainty about the business, I'm going to agree with the mean and median of this business and put the future forward PE to be about 12.5. This gives me a return under the S&P. I'm still going to look into this business, but I'm quite skeptical of it currently given the amount of shares they are issuing, the gross profit margin declines, and the low barrier entry to this market. Conclusion. These two companies look like very interesting artificial intelligence plays, although Applied Materials looks a lot more interesting to me right now. Let me know what you think about these companies in the comments. I'll be doing more research on them and we will be doing deeper dive videos to see if these opportunities really are that good. The PE is cheap for both of these companies, and if the growth is going to be there in the future, which it looks like it will be due to artificial intelligence, then these are way better companies than companies like Coca-Cola, Mondelez, etc. that have no growth and very high PEs. Artificial intelligence is a tailwind that will benefit a lot of tech companies. It doesn't look like it's good for most workers though, but maybe if we invest in the right artificial intelligence stocks, we can protect ourselves.